Welcome to the Daily Brief. This is being prepared Monday, October 24th. Well, I'll go over the highlights for what happened in the market on Monday, and then we'll see how things look in a highlight basis for Tuesday, October 25th. And if you want a more in-depth explanation, please check out the full-length video. We had another update. So this idea that the Monday after options expiration, where we had a positive Friday, didn't really play out in Monday's session. We ended up advancing. Just a couple areas that I've noticed is we're starting to get to upward resistance right now. And I don't have that on the slides. I just noticed that as I was recording the full length video. We didn't see a lot of participation from the NASDAQ and the NASDAQ 100. They were positive, but they weren't leading the way in Monday's session. So again, just something else to be a little aware of. So let's go back and talk about what happened. We did have a higher open, and it was a strange open. We had the S&P futures were up, the dollar was up, and the VIX was up. Now they worked themselves out as the day went through all of its gyrations, but we don't usually see that right at the open. Prices chopped between the unchanged level and R1 at 37.91. As the day went on, we broke above R1, and then we closed just above R1. We were up 1.19% on slightly below average volume. And then the technicals, they're looking a lot more positive. Now, you could also say that we're starting to get overbought because we've been in this sideways channel for most of October, and we're at the upper end of that now. Are we going to be able to break through and go higher? Or are we going to hit overhead resistance and start to come back down? But the market is still working on this scenario of inflation and interest rates. That's the big thing. And I've changed this up a little bit, where with the geopolitical concerns, Russia, there looks like that could be getting kind of ugly again. I understand that over the weekend, the 101st Airborne was deployed to Romania, and that probably won't be seen as real good news in Russia. So what are they going to do in response to that? And then what's the US going to do and NATO going to do in response to that? So anyway, that could get ugly, but it's not really influencing the markets yet per se. We have a lot of earnings that are coming out, and then the Fed is on lockdown or silent mode or mute or whatever you want to call it. They can't speak because they have a meeting coming up on the 2nd. And then I've added the midterm election. Again, you might have strong political views one way or the other. Usually that doesn't come into play in the markets. It'll come in the form of some kind of policy that might have an impact on the markets, because typically because the stock market, they have friends on both sides. And so they see most of what goes on in DC as just theater, just a bunch of clowns yelling and screaming about things that really don't matter. But with the policy that could be coming out, that might have some influence more longer term. So what are some comments? Hong Kong, man, they got hammered. They were down 6.4%. President Xi just elected himself for another 5-year term, which pretty much means he's going to be there for life. And then another interesting thing happened while this was happening is their former president was just sitting next to President Xi, and they came over and picked him up and took him out. And I don't know if they've heard from him since. So it's kind of a weird thing to have happen with really no explanation, but that's kind of how things work in China. China's GDP ended up being up 3.9%. So you don't know if that's doctored or real. The S&P is back at about the 3,800 level. We're just below that right now. And it was just not so long ago. We were, 37, 36, into the 35s. And then this is the scenario, but it seems a little more valid this time. This is based on that article that came out on Friday's Wall Street Journal, where some information was leaked to a reporter. And so the market's liking that and running with it right now, that, yeah, they're going to go ahead and raise interest rates 0.75% at their November 2nd meeting, but they just might look at not raising it as much at their December meeting. And that's so far being taken as a positive sign. The Dow was able to get above its 50-period moving average. It was right there after Friday's session. And the 10 to the 5, the 10 to the 2, those yield curves are still inverted, but the 30 to the 5, it's no longer inverted. Sentiment is right in the middle. It's at 49. So it's neutral right now. And then Rishi Sunak, and we'll learn how to pronounce his name over time. Apparently, he was the finance minister that they fired. If I'm getting this right, well, it looks like he's going to be the next UK prime minister. We had the preliminary IHS market manufacturing as well as the services report came out. Not real big influential reports, but in manufacturing, it came in at 49.9. The last time we got this, it was at 52. It's below 50. That's showing some contraction and weaker than last time. And then as far as the services, it came in at 46.6, below 50, and also weaker than the last time we got this report at 49.3. So just going into this scenario that the economy is weakening. Our trend is still negative. We're below the moving average. So if you're a little more aggressive, you might consider us to be neutral and no trend right now. So, and it is weakening, but it's still above 20. And our bias is positive because we had a good up day on Friday. Monday was positive. I'm kind of tentative with the positive momentum because we're starting to look a little extended, a little overbought, and we're starting to hit some resistance. But okay, we had two really good up days after having some really bad days. You could have suggested that I say mixed for our momentum. And then this, I just kind of updated this a little bit. Apparently now the World Series is set. We have Philadelphia, they're playing against Houston, who eliminated the Yankees, which whatever team is playing the Yankees is always my second favorite team after the Seattle Mariners. But we'll have to see. And I've kind of color coded this because I understand that in 1929 and in 1930, the Phillies were in the World Series, but they did not win, where they did win in 1980 and 2008. So again, this is just pure coincidental and more for humor purposes. So what's our outlook for Tuesday? The technicals, they continue to improve, but we're starting to look a little extreme in the short term and even a little bit in the intermediate term. Doesn't mean they have to stop. It just means we're starting to get a little overextended. And then the Monday after a positive options expiration day can often be weak. Nah, didn't happen this time. And then the economic reports coming out. We have FHFA housing prices index. That'll be coming out. The Case-Shiller home price index, consumer confidence. So we're getting some more housing data. And then all the geopolitical things, Russia, Ukraine. I have Ukraine in yellow right now because of the deployment of the 101st Airborne. I mean, that hasn't happened since World War II. So it's not like we just send those guys around just for kicks, on goodwill tours. And then weird things going on in China, but the market is still really fixated on inflation and interest rates. The Fed is still on lockdown until they'll come out and make their announcement after their meeting and then have the press conference. And then the UK, maybe they'll get things under control a little bit there. And then I've added the midterm election to the list as well. And I just have pretty much a copy and paste right here of all the things, because these are potential headwinds. Any one of these, if they turn bad, could really have at least a short-term impact on stocks. The technicals are turning positive, but they're becoming overbought. So you don't really want to go with the down scenario right now. I'm going more with the up until it proves that maybe this is not happening, because the technicals are turning more positive, but we're a little leery because we're getting a little overextended. Our scenarios are showing improvement. The one area that's not improving is our sector rotation. That still continues to be weaker for right now. Now, that's a little bit of a concern. And some of the other setup charts that I go through in the full length video, those are showing improvement. Technicals are looking better. We're above the 20 period moving average. Can we get back up to the 50? We're at the 50, close to the 50 exponential moving average right now, but it's going to be the simple moving average that's still above where we're at currently. And we have a lot of fib retracements that could act as overhead resistance, as well as previous highs and lows. You might go neutral, but I'm not really going that way because the ADX is still above 20. The red line's still on top, and those lines are starting to get pretty close to each other. So we might be seeing a shift in the trend in the not too distant future. All right, so our conclusion, the S&P, it's turning positive, but starting to look a little overextended in the short term and even in the intermediate term, but in the long term, we're still negative. So thank you. Please feel free to check out the full-length video. I hope you find this helpful. I hope you have a great Tuesday, and I'll prepare the next video after Tuesday's session.